Steve Biko, the CEO of Hidalgo Group. Thanks for joining us, Biko. Now, as I've mentioned there, the NSE 20 share index is now up 19 points. Take us through today's market activity. How sustainable do you see this move, seeing as the past few weeks have seen very sideways trading on the NSE, but at least in the past 2 days and today as well, we've seen the NSE maintain a steady rise.
I believe what's happening at the market is basically foreign investors are cashing in, taking in the capital gains that they've had, thanks to the issue of the euro, aspect in the developed markets. And I think what's happening is they're trying to see what's the way forward. So the best option is to cash in on the capital gains, forcing local retailers into a position whereby they're going to look at the way forward as they gauge the markets in terms of political growth, political aspects, the referendum on the 4th of August, which is just a couple of weeks down the road. But also, most counters are very strong, with strong, impressive fundamentals, especially the financials. We're looking at Kenya Commercial Bank, we're looking at Equity. So I believe at the end of the day, most of them have reached the optimal marginal appreciation for them to actually be able to cash in. So the market, the pendulum activity that you've seen the last couple of weeks actually is going on a steady flow, whereby the market will at least have a progressive growth curve for the remainder of this quarter.
Kenya Commercial Bank was among the active counters today, up 1.25%. Definitely the stock there reacting to the positive news we saw yesterday. Profit before tax up 16% for the first half of 2010. What's your outlook for KCB, keeping in mind the rights issue?
I believe KCB, dubbed one of the largest banks in terms of assets, with impressive results, 16.8% growth last quarter is something really impressive. And I'm looking at it in terms of a regional expansion. That's where they're going to really cash in on the strategy. And I believe the share price at the market is actually going to be positively impacted by the strong fundamentals. And I believe if the rights issue is maximized properly, the 15 billion shillings will be a serious war chest to battle for the common market for the local retailers at the end of the day in the East African region.
Positive news also within the banking sector. Starting August the 10th, the banks will be sharing credit information with credit referencing bureaus as well as within the banks. Who are the winners in this case?
Interesting question, because I don't think they are going to be winners or losers in this case. What I think, the one thing that's actually missing is, in as much as it's prudent to share the information, at the end of the day, many people are going to be wary of borrowing loans, because at the end of the day, you never really know how your business can go. You borrow loans with an innocent intention of repaying back, but then things go south. So people are going to watch their steps before they borrow. And most of the aspect whereby if you're borrowing a loan and you need a guarantor, it's going to be another hurdle also. So I think research is actually missing in this aspect to actually determine which category of the borrowers is the best. Because what I know is the people at the bottom of the pyramid, the ordinary people, are the easiest people to pay back the money they borrow. But most of the financial institutions are not willing to touch them. So we're looking at the financial institution, looking at the people who have classy jobs, make some good money in the middle of the pyramid and upper, who have issues paying back the money. So at the end of the day, in as much as such information and such data is relevant for the deepening of the financial markets in the country, at the end of the day, proper research needs to be done to be able to understand repayment trends for all the borrowers, and then from there we can be able to determine who are the winners and who are the losers. Let's
look at KENOL KOBIL. Now, this is one of the stocks that have been that analysts say it is one to watch, but there's been some hurdles lately, involving the Kenya refineries, and there seems to be some volatility expected on that counter. What's your analysis of exactly what's going on with KENOL KOBIL and how it's going to impact the stock going forward?
What I know is the energy sector in Kenya has actually changed a lot with the key players exiting the market. And in the last weeks, we've seen KENOL KOBIL strategizing itself to be a key player. Unfortunately, it's been riddled with a core issue, the matter now that's actually under arbitration. And then we're seeing what's happening at the refinery, because I believe most of this is actually politically instigated, basically trying to understand who's going to control this. We're looking at National Oil Corporation actually increasing its quota at the refinery. We're looking at Oil Libya also, flexing its muscles to see how they can take advantage of the East African, region block as a trading aspect. So what I know is at the end of the day, it's a stock to cleanly watch, because it's been one of the leading stocks in the energy sector. And with the news that's happening, definitely it's going to have a negative impact on its stock price.